Hi, Trent Mell, CEO of Electra Battery Materials. We're building an integrated battery materials park in Canada for North America, starting with a cobalt refinery being commissioned at the end of this year.
Trent, good to have you back on. I haven't seen you since January, but judging by the news releases, you've been rather busy. Not least of all, you've been trotting over to the Far East. What was happening out there?
Yeah, just got back from Korea. So we're 6 months away from commissioning. And so as I said to you pre-interview, FOMO is kind of kicking in the supply chain. It feels last year was really about investing in the downstream, the battery plants, the assembly plants. And now there's a big focus on cathode, on precursor, and refining. And so for us, it's an opportunity to meet with all the players you'd expect in Korea and talk about partnerships, offtake. And it's gone beyond cobalt. I got to tell you, with the articulation of this broader vision, there's a lot of focus on nickel and how we can help de-risk North American nickel strategy.
Right. I'm interested in the nature of those conversations, right? Because you're right. The FOMO thing is very clear. We've spoken to lots of companies who have, gone into those conversations not quite knowing what to expect, and money's been thrown at them. They're trying to secure certainty of supply. We're going to talk about cobalt today, obviously, but say nickel and cobalt. Nickel, copper, everything, lithium, graphite, everything is in that mix at the moment. So, given the early stage of those conversations that you're having, I mean, did you walk away feeling that the money's there if you want it, and is it the type of money that you want?
Yeah, I guess for us, it's not so much the money, right? It's the commercial relationship. So we're funded to production on the cobalt plant. If we do when we do a big nickel refinery, that's a big lift, right? It's a much larger plant than cobalt. So there is a bigger strategic discussion there. Right now, it's really about where the chess pieces are going to lie on the board, right? And what vertical we align ourselves with, right? So you've got, of course, Ford, SK Innovation, you've got GM with LG Chem. And so as these battery alliances are formed, now they're looking downstream. And I think unlike 2 years ago, there's a greater clarity of vision here that we need to onshore everything. We want to connect North American minerals to North American batteries. And that was far from certain 2 years ago. Maybe we'll buy our batteries from Asia, from Japan, Korea, China. And that's kind of fallen away. And so really the conversation is, let's talk about a cobalt offtake with a view to a broader relationship around recycling, around nickel, and making you part of our supply chain. And ultimately, of course, having our precursor set up behind us here so that you've got a true integrated facility. So it's baby steps towards a bigger vision, but we're not looking for capital at this point.
Okay, so but you're looking for commercial relationships or commercial contracts in place. So you get, I guess, a similar question, which is, what's the nature of those contracts need to look like for you?
Yeah, for us, it's it's an offtake contract, and so.
But what does that mean? Explain what that means, because your perception of what it could look like from early days versus what conversations are now informing you, I guess things change, right?
Yeah, it does change, and so we start producing in January 2023. The reality is not a lot of battery making happening on this side of the world in January 23. So the first relationship is an offtake contract for a certain quantity that we're likely going to be shipping to Europe, Japan, Korea, maybe all of the above. With the view, and then the rest of it, we can sell it. Selling the product is not hard. It's trying to identify the broader framework. So if we can do a small portion in 23, growing in 24, then you hit it big time in 2025, where you're actually keeping it here on the continent. It allows us to start planning around, again, recycling. Whose cells are we going to be taking in? Whose nickel are we going to be processing? And so for us, it's when I say a baby step, it's allocating a portion of our product now so they have security of supply from 2025 onward.
Right. Okay. Because when we first started talking back in the day, this was the vision was a North American integrated battery park. Now it's a integrated battery park in North America. And the conversations are in the Far East and possibly Europe, because the US isn't quite there yet. So again, how far and then the other component that's changed a lot here is like when we spoke in January, Iron Creek potential spin out, right? Right. So it was almost seen as non-core. So the pieces on your chessboard are moving around. You're being agile and adjusting to market conditions. So where's everything settled for you at the moment, or has it not quite got there?
Yeah, then I got to say the team's growing as a result, because the strategy will be further defined once we sign that first contract, and I suspect there'll be two of them, two different suppliers. But I think the pieces will fall into place, because then you'll know, okay, got it. They signed with that person, so it's got to be that precursor, and all the pieces start to fall together. But Iron Creek, a case in point, right? A year ago we were talking about cobalt and cobalt. Now they're coming to us saying, well, let's talk about nickel and cobalt as it means to get to nickel. And Iron Creek, yeah, we were going in the process of how do we monetize that? I don't want to use cash flow from the refinery to build a capital intensive cyclical asset. And as we started thinking about that, then the supply chain says, well, hold on, you've got the potential to deliver us cobalt in North America and reduce our reliance on the DRC. And so now we've got 3 different interested parties that might be willing to put their balance sheet to work to help us accelerate that. And we've underspent there. Early days, really, but it's given us pause. And so we'll keep advancing that at a modest pace, focusing most of our resources on the refinery. And I think there's maybe there is an opportunity to keep this vertically integrated if it's not our balance sheet being put to work, at least at this point in time.
Right. So what would that look like? That's interesting. If you're not using your balance sheet, your capital, you're not getting distracted. That's good news indeed. But what would the economics look like, or could the economics look like for you?
Yeah, it would. There's two formulations. One would be an actual asset level investment by, let's say, an auto company,
right?
And they would own half of a mineral asset or more. The other formulation would be an investment in Electra, in the public company, and with the use of proceeds being sent to Iron Creek to help move that along. And you could look at streams and offtakes and all kinds of ways to kind of monetize that cobalt for a company. But it would entail obviously developing that asset and either beneficiating, refining it here in Ontario, or maybe doing something locally in the state of Idaho. But the idea at its root is much like the nickel strategy. They're all looking at how do we get a domestic supply of minerals and reduce this reliance on a foreign supply.
Okay, and then what's the process you need to go through to work out the best option there in terms of the spin out as previously discussed, and maybe someone coming in with their balance sheet and either investing into at asset level or at corporate level on this project? How do you assess the which one is the best for you and your shareholders?
Yeah, well, look, we don't get a lot of value for Iron Creek today. So step one. We're drilling now at a target 1.5 kilometers away called Ruby. If that hits, the potential either is these things are connected 1.5 kilometers away, or it's a new system, and maybe you start to get a little bit more interested in the asset for a kind of a district play, which I believe could be there. But otherwise the holding costs are low, right? Just put $3 or $4 million a year into that asset and keep it moving along. Work on 3 things: drill, permit, and metallurgy. You can move that forward. And there's a lot of money available now with the DOE, DOD, particularly the energy, once you get it out of the ground. So if you had a larger vision for Idaho and the Idaho Cobalt Belt, a district refining processing center it wouldn't be off the table from a collaborative government supported perspective. So for instance.
Okay. What's your next door neighbor, Shareholder, doing at the moment? Are they doing anything?
I think their strategy, they're going to be in production, I guess, later this year. I think they're going to stockpile initially with a view to sending their feed to Brazil and process through that refinery, which is going through a DFS now. But yeah, look, I mean, Jervois, us, other targets, could you envision 30 years of mining in that belt? I mean, I certainly can. And in that case, a state legacy asset to centralize all the processing might make a lot of sense. I got to tell you, Matt, these are very early days. We haven't advanced much on that, but I've got a new VP engineering that will be joining us soon, and he'll be tasked with things like that, looking at all the different growth opportunities that are outside of our current refinery here behind me.
Okay, so then in which case let's park up Iron Creek in terms of your decision making. I guess will make it self-evident over the next 6 months or so. Tell me about some of these new hires. You mentioned a couple of them already, but you seem to be kind of growing up a little bit here in terms of understanding what you need to be. So who are the new guys and gals? Yeah,
we've been a little bit slow, a little gun shy maybe to staff up. So site's been growing. We're up to 19 full-time people. We made the decision last fall to replace our contractor with an owner's team. And I mean, it's the best thing we could have done in this crazy market. With turnover of people, and you get ownership, and the people building it, by and large, the people that are going to be running it, right? So there's a real understanding of what you want to be inheriting. Corporate level, we hired Renata Cardoso, VP Sustainability Low Carbon. So she spent 15 years as an ESG leader at Valley, brought her in, and it's been just a huge add. Joe Raccanelli joined us. He was head of IR for Sherritt, so obviously he knows the nickel and cobalt market. He just started last week. We've got a VP engineering that'll be joining from Valley, not yet announced. And unfortunately, in a hot market, we did lose our CFO a month ago to a gold major. and we'll have an offer out to a candidate probably today. So the corporate team is growing. More importantly, the site team has grown really well. We're going to have a world-class lab up there. We've got another PhD on the team, and all the skilled trades are coming in. And it's nice because we're 10 minutes away from a town of 15,000, and you don't need to do that commute that some of the electricians and millwrights have to do, an hour and a half each way to a mine site. So attracting talent for us has been relatively easy, albeit it's a pretty hot labor market right now.
It definitely is, for sure. The other kind of, I guess, big boy moment for you would be going on the NASDAQ, right? That's a big movement in terms of exposing yourself to the US investor community. How's that worked out for you in terms of liquidity?
And I've been happy. I've been dreading that for a year plus, right? As a shareholder, I'm mindful of some of the examples where you do the roll up, which we had to do, right? Stock consolidation, and you trade down, and we traded up. We traded up 15% after announcing an 18-to-1 consolidation. The broader market took us down, but the NASDAQ listing was great. The liquidity has already moved there. We're more liquid there than we are in Toronto, and we're a month in or so. We had a couple of crazy days, like meme stock days, where we traded, $8 million of stock. It didn't last, but it was interesting. And you'll have the bigger swings now being on the big board. But I think, and I just got back from marketing, so in addition to being in Korea, I was marketing Singapore, Sydney, and through Europe. And it makes a big difference, right, to be off the OTC. And if we're still in the venture exchange, but the NASDAQ, they take you more seriously. It's a more, I guess, respectable market capitalization, 32 million shares out instead of 560. So the investor class that we're targeting for our next stage of growth, I think, is more receptive to the way we've recapitalized.
So do you need to, with the idea to come off the TSXV? Or do you need, obviously, because you've got your facility there, how's that work in terms of benefits, credits, and so forth?
We wouldn't give up Toronto completely. You could go to the TSX. The quirk, though, with the TSX is you got to be cash flow generating unless you're a mining company. And we're not a mining company. So we're not a cash flow status. So we'll look at it next year, but I'm not going to pay a crazy fee just to uplist if the NASDAQ is going to give us those benefits. So I'm kind of neutral on whether we stay venture or go TSX, but I won't pay $1 million for the honor of uplisting to a bigger board. I don't think. We'll see.
Yeah, NASDAQ is, what's that like compared to NYSE? Is that obviously not as onerous financially, is it?
Yeah, you know what I like about the NASDAQ? One of the customer service is great, very responsive. They don't actually on the NYSE, you actually have to pay on a per share basis every time you go and issue equity. So there's an embedded cost there. NASDAQ, look, your tech, your ESG, you're kind of, hopefully we're one of the cool kids. But it's been a great process for us. The only downside of US listing is the D&O insurance goes up. It's about 8 times higher than it was here in Canada. Litigious as we are in America, I guess. So there's that sort of downside. But other than that, nothing but a great experience. And ringing the closing bell on the day we listed was, I gotta say, pretty cool. As just sort of a milestone that marked the occasion.
Yeah, no, I imagine it was. It's a big one, but more importantly, is the kind of liquidity component to what it brings you. We'll see what happens when the market's going to come back. Have you got a view in that? What's happening out there? Obviously the broader market's been hit, not just natural resources, but everyone.
Yeah, I think it's a broader market, and we don't have the lofty valuations that all the tech and crypto companies had. So I don't think we've been as impacted, but it still kind of sucks. We're not looking to raise money in the near term. We could, but we don't need to. We'll raise money at some point for the recycling strategy. So I guess for me, it's there's the sell off, and we'll see how that transpires. I think the energy transition trade is still on at some point. The question is, are we in a sell and may go away mode, or will there be any kind of market action through the summer? I think some of the M&A we're seeing in the gold space might have spillover effects. We'll see, but I don't think our sector is down and out by any means.
And so, have you, and given some market conditions, and given the conversations that you're having, with potential strategic partners in the Far East and elsewhere, OEMs and other battery manufacturers, is the information that you're getting, because if I look at the cobalt market specifically, pricing is a really hard thing to kind of get a grip on, right? And I'm trying to work out from the economic studies that you've done to date, changing market conditions, this, ever growing need and demand for what it is that you've got, and the addition of nickel and so forth. Do you have to kind of reassess the economics, and would that have to be in study form, or are you saying, well, look, we've got everything we need. We've kind of got enough capital to kind of get us going on the refinery construction. We know that with the battery recycling, there's huge demand, and we know the prices are moving. We're good for a while, but at the point you go back to market, is there an expectation that you'll need to have done a study for them to be able to assess what it is that you've got, given it's not conventional mining as such?
Yeah, so three parts of the business. So if you look at the cobalt side of the equation, we're buying product, buying feed, and selling product on a quoted market basis, and the quotation period's aligned. So we're earning a pretty steady margin, up markets, down markets. So we don't face the commodity risk. Iron Creek a little different. I mean, I'd like to see sustained prices over $24, $25. We're sitting at 38. So and the market's softened, to be clear, on all the commodities, but it doesn't sort of stress me. I think when you see the cobalt market growing at 26% CAGR the next 5 years, supply, yes, is coming on stream through Glencore and others, but demand will absorb that. And then lastly, recycling. Recycling is, it's a weird market, right? Glencore, forget the shredding of the batteries. A lot of people do that, but the processing, most of that's Glencore. That's 90% of the market, and they're using pyrometallurgy, so they don't get lithium, they don't get graphite, and the margin opportunities are really attractive. And so I don't worry about black mass. I think that will get more competitive through time, but as a first mover, the market there seems fairly generous, at least for the next couple of years.
Right, but coming back to the question around money, is you think the money is readily available and your product and it is well understood enough that you're not going to need to go through another kind of study phase, given the kind of not change strategy per se, but there's a few things that you're tweaking, right? So
the tweaking is right. Yeah. So the study, we're going to do a demonstration plan on recycling. So we'll have proof of concept on that. That'll start in August, and that'll maybe shine the light on that part of our team and our capabilities. Yeah, the money piece. Look, we announced that we're on schedule for commissioning, but we're going to be over budget. We're guiding an extra 5 or 10%. Hard to get clarity, but it's pretty tight to our control budget. So there's a gap there, to be honest, and there will be a need to raise money for the recycling circuit. What that looks like, I don't know yet. We're using a lot of what you see behind me, plant equipment, lab. Is it 20 million? I don't know. It's as good a guess, I guess, I can give you for now. It's not a huge amount. So, we could go out and raise 20 or 30 CAD, but no rush. We could do that at the end of the year, towards the end of the year, when market conditions present themselves. And I'd like to do that after we've got our partnerships aligned. We could take in a strategic investor as well as an OEM contract. So we've got a few levers here at our disposal. I'm not going to run and do an equity raise. We've got an ATM at the market program as well, so you can dribble shares out. But I'm in no rush to do what I call sort of a cats and dogs equity offering with everybody and their uncle plowing in for warrant coverage only to turn around and sell it the next day. That's just not, we don't need to do that. Thank goodness I've done that. Those days, God willing, are over.
Yeah, it's nice to be past that, isn't it? Really.
Yeah, it is. Yeah.
Okay, so you got optionality on future cash requirement, which isn't necessarily like a pure equity plus warrant dilution. Yeah. Okay, fine, understood. So your view on the next 6 months for you is what should we be looking at as investors, whether we're in the US or in Canada? What are we looking at? Yeah,
so obviously the ramp up for the next 6 months as we hit commissioning. That's 1. 2 is going to be the recycling demo plant that'll start sort of August into September, and what that yields. We're pretty excited about that, actually. 3 is going to be the commercial contract or contracts. Timing's out of our control. We have a lot of MOUs out there that could happen in days, weeks, or months. But I think it's on the shorter end of the scale. So that would be the 3rd. We're looking at a growth opportunity. There's another battery materials park coming together in the continent, and maybe there's a role for us there. And then Iron Creek is a toggle. We'll have to wait and see how that happens. I think there'll be a few innings before that one becomes clear. But as we drill it, right, hitting a new system a kilometer and a half away could be exciting. But that's TBD. We'll see what the drill bit reveals.
Okay, Trent, great update there. Appreciate you making the time to see us. We shall stay in touch with you and look for more of these headlines coming off your press releases as things progress. Thank you.
All right, good seeing you. Thank you.